I want to talk about where you think Bitcoin is, but also want to talk about how you think about MicroStrategy and your company as a proxy for Bitcoin now that ETFs are available to the public.
Sure. Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so as it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
In terms, though, of how investors should think about your company, and right now I think they think of your company as a proxy for Bitcoin. It was a way for investors, frankly, who didn't want to buy the underlying coins to get access to Bitcoin and exposure to Bitcoin. The question now, though, that these ETFs have been approved and folks are funneling money towards BlackRock and so many others, how should they think about your company versus doing that?
Yeah, so BlackRock is like the container ship or the super tanker of Bitcoin. They can take $1 billion a day into their capital structure, and they can hold that very efficiently, 25 basis points. MicroStrategy is like air freight. We got higher performance. So what's going on here? MicroStrategy's got leverage. If we borrowed $800 million at 62 basis points, is there any company in the world that you wouldn't like to invest in that could borrow $1 billion at less than 1% interest to invest in your best idea? So we get that very intelligent leverage. It's non-recourse, it's unsecured, and then we buy Bitcoin with it. That leverage gives us volatility. It gives us performance. The performance gives us volatility. The volatility attracts capital, and we can then leverage more. It's kind of intelligent because it's convertible debt. It's given our shareholders more Bitcoin per share this week than they had a few weeks ago. So it's very accretive for them. And it's pretty compelling for every investor. If you're Bitcoin curious right now and you want to buy Bitcoin at the all-time high, how do you get the upside in Bitcoin with downside protection? MicroStrategy sold $800 million in debt, and we have $13 billion of Bitcoin on the balance sheet. So we're giving you an over-collateralized loan and the upside. But if you're a Bitcoin maximalist and you love Bitcoin and you want to hold it forever, the ETFs charge you 25 basis points. MicroStrategy is accreting. We're giving you a yield against your shares in a tax-efficient fashion. So the maximalists like the equity. The hedgers, they kind of like the upside with downside protection. The traders love the vol. You know, we've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs. And an ETF isn't going to issue a convertible bond with upside to Bitcoin, but downside protection.
So Michael, I try to understand the mathematics, and I know people like you went to MIT, and it just seems maybe it's more understandable for you or Andreessen or Peter Thiel or whatever. At 17, down from 68, and you know your leverage and everything else. Did you ever wake up in the middle of the night and have any doubt whatsoever? That's my one question, because I was thinking about you at 17,000, and now I look at it now, and I just can't believe what the market cap of your company is based on it now. I guess, and the other thing is, when it halves, should we, if we look at it on stock to flow, do we have to just double what the potential price is based on, if you use that metric? Is that a valid metric to use? And after the halving, shouldn't it be 140,000 immediately if it's worth 72 now?
Two good questions. And thanks for asking me. First, with regard to Bitcoin, no, there's no doubt in my mind Bitcoin was a better investment at 17,000 than it was at 65,000. I take the Warren Buffett view on this. Bitcoin's a superior investment to gold, equity, bonds, and real estate because it's digital. You can trade it 1,000,000 times faster than conventional assets using a computer. It's available. Most other assets only trade less than 20% of the time. Bitcoin's trading 168 hours a week. We bought $800 million of Bitcoin, and a lot of it we bought over the weekend when all the conventional markets are closed. It's global. It's the most widely recognized and trusted investment asset in the world right now. It's ethical because it's the king of all commodities. There's no issuer. There's no company. There's no country controlling it. And fundamentally, it's useful. Thousands of market makers can trade it all the time. Millions of companies can trade it. Billions of people. If you want to buy a house on Saturday in Africa, this is the way to do it. If you want to buy a car on Sunday morning, this is the way to do it. So it's a pretty great asset. It's the greatest of the assets, in my opinion. There's no second best asset. So I didn't have any question about it. We're just waiting for the rest of the world to realize how good it is. As for your second question, the halving, look, the selling in the market for the past month has been primarily bankruptcy estates that are liquidating GBTC at FTX or Genesis or the like. Once they got done rebalancing, the natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're writing it the other direction, and the protocol's working to everybody's benefit. There's just no reason why it shouldn't just keep adjusting up to find the marginal supply as the demand builds.
Your market cap, Michael, is about $24 billion. You mentioned you got about $15 billion in Bitcoin on the balance sheet. So the substantial part of your market cap is now Bitcoin as opposed to your core software business. Does a software business exist solely so you can borrow off of that in order to buy Bitcoin? And how can we understand right now the health of your business as you undergo a transition of customers to cloud-based software?
We have now rebranded ourselves as a Bitcoin development company, think like a real estate development company. And certainly the substantial amount of our enterprise value is based on our unique ability to issue securities and to purchase Bitcoin with convertible debt, with equity and the like. And so we understand that. But the only reason we could make this transition is because the software business was healthy. It does generate steady cash flow. It does allow us to issue debt, to issue equity. It does make us unique because we're able to, we've got a very functional options market. We've got a very functional debt market. And we've got a very stable operating business that we can use. If you look at our last result, we actually bought a lot of Bitcoin with operating cash or cash out of the operating business. And that is purely accretive to our shareholders. So we think we're unique, and that's working very, very well right now.
Hey, Michael, do you think long term that there's any risk at this point? Has Bitcoin reached such escape velocity that there's any risk that governments, the US government, Chinese government, other governments somehow do something to Bitcoin that puts its growth in jeopardy?
You know, it's another great question, Andrew. A lot of times the skeptics, they say Bitcoin looks too good to be true. It's so good to be true. Someone's going to take it away from you. And that's based on a fundamental misunderstanding about Bitcoin. People refer to it as currency or digital currency, and that's unfortunate historical artifact. It's not digital currency. it's digital property. And once you make that big leap and understand it's property, you see the compelling use case is capital preservation for everyone in the world. There's no anathema associated with owning property. You can own $1 billion building in New York City. You can own every place in the world where they allow you to own property, which means China, Europe, the US. They're going to embrace Bitcoin as digital property. All the controversial issues around cryptos have to do with their use as a medium of exchange. But what I'm here to say really is medium of exchange is only worth $1 trillion. Store of value is worth $100 trillion. So I give your company, I give your family, I give your institution $1 billion. I drop you in Africa and I say, you got to save the capital for 100 years. What are you going to buy? And the answer is nothing. There is nothing on the entire continent you can buy that's better than Bitcoin. So Bitcoin's going to be embraced as property. It's going to be controversial if people think of it as a currency. So I would encourage people to think of it as digital property, $1 billion building in cyberspace.
And
hold it for 100 years.
Does it ever have to be a currency? Or do you think it ever becomes a quote unquote currency?
It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue, right? But every rich person I know owns property in London or New York City or somewhere, and none of them complain about not being able to spend their building as a medium of exchange. So the killer application is capital preservation for everybody. The store of value is the killer use case. Medium of exchange is a distraction. Governments are always going to issue currency. They're always going to make it legal tender, and that's just fine. Bitcoin's competing with gold. It's going to eat it, and then it's competing with risk assets as a long-term hold, and it's competing with you buying an Airbnb as a retirement income source if you're a middle-class person.
Michael, I want to thank you for joining us this morning. Really appreciate it, and look forward to talking to you again very, very soon. Thank you.
Yeah, thanks for everything.